Welcome back to Dinar Community Channel. What if everything you've heard about the Iraqi dinar is only half the truth? I went straight to the source, 5 top currency experts with real-world experience, and what they revealed about the IQD will change the way you see this controversial investment forever. Over the past several years, few currencies have attracted as much intrigue, controversy, and anticipation as the Iraqi dinar IQD. The conversations around this currency have moved beyond simple Forex speculation and into the realm of financial folklore. From whispered promises of massive revaluations to conspiracy-laden theories about global wealth resets, the IQD has taken on a mythic status in certain circles. To cut through the noise, I decided to do what few have done publicly: ask real experts, people with direct experience in global currency markets, central banking, and economic policy, what they actually think about the Iraqi dinar. No hype, no spin, just professional opinions based on real-world knowledge. After speaking to 5 distinct voices in the financial world, each with a unique lens on currency markets, I walked away with insights that were both sobering and surprising. Here's what they told me. Expert 1. Former IMF currency analyst. My first conversation was with a former senior currency strategist who spent more than a decade at the International Monetary Fund. When I mentioned the IQD and the rumors surrounding its possible revaluation, he didn't hesitate to respond. People confuse redenomination with revaluation, he said. A country like Iraq may redenominate its currency, cutting zeros off notes, adjusting the look and feel of the money supply, but that doesn't mean the underlying economic fundamentals change overnight. He went on to explain that the value of a currency is driven by trust, fiscal discipline, and economic output, not hopes, rumors, or YouTube predictions. Can Iraq build a stronger currency over time? Sure, he said, but it has to come from growth in GDP, export revenues, stable governance, and disciplined monetary policy. Not wishful thinking. His final point: the IQD's path to stability is a long-term game, and anyone expecting a miracle shift to $3 or $4 per dinar overnight is not grounded in economic reality. Expert 2. Middle East banking executive. Next, I spoke with a banking executive based in Dubai who oversees regional currency operations for a major multinational bank. He had dealt with the IQD directly, both from a regulatory and logistical standpoint. From our perspective, the dinar is more of a cash management issue than a speculative asset, he told me. Yes, Iraq has oil wealth. Yes, they've taken steps to rebuild their financial institutions. But their currency still faces constraints, including international convertibility. He explained that although Iraq has made progress, its banking system remains largely domestic and controlled. Most IQD transactions still happen inside the country, and only a handful of foreign banks are allowed to interact with it. The Central Bank of Iraq has taken measured steps to stabilize their economy. But this is not the kind of currency that floats freely in global Forex markets like the euro or yen. It's tightly managed, and that limits its potential for explosive short-term gains. His take was pragmatic. Treat the IQD like a regional, developing currency with long-term reform potential, not a lottery ticket. Expert 3. Currency trader at a U.S. hedge fund. When I approached a veteran Forex trader who works with one of the top-performing hedge funds in New York, I expected him to laugh off the IQD as irrelevant. Instead, he gave a far more nuanced view. We've looked at the dinar, he admitted. Not for short-term plays, but in terms of geopolitical leverage. He elaborated that currencies like the IQD fall into what some traders call event-based opportunities, rare, volatile movements triggered by structural changes, oil shocks, regime changes, or sudden IMF interventions. Is it something we actively trade every day? No, liquidity is too low, spreads are huge, and it's not freely traded. But is it worth watching? Absolutely. Iraq sits on massive untapped reserves, and if they ever align politically and economically, the dinar could surge in regional importance. He emphasized that any such movement would likely not come from a sudden decree or backroom deal, but from years of policy evolution and gradual easing of capital controls. The people expecting a pop to $4 tomorrow are misreading the script, he said. But if Iraq plays its cards right, they might find their way to a meaningful regional currency status in the next 5 to 10 years. Expert 4. Former central bank advisor in the Middle East. My fourth conversation took a more cautious tone. The expert, a consultant who had worked directly with central banks in the Middle East, including Iraq, warned against the hype machine surrounding the IQD. Iraqis themselves are wary of outside speculation, he said. Many local economists feel that foreign investors are treating their currency like a fantasy asset. That creates distortion. He went on to explain that even within Iraq, the government and central bank are cautious about any sudden moves. Revaluing the dinar dramatically, he noted, could destabilize trade, inflate internal debt burdens, and hurt exporters. There is a national pride tied to the dinar, yes. And many in the country hope it will someday return to pre-war values. But they are more focused right now on combating corruption, building infrastructure, and stabilizing fiscal policy. A strong currency will follow from those efforts, not precede them. He also mentioned that external speculation can create political tension. If the population believes an overnight windfall is coming, pressure mounts on leaders to take unsustainable shortcuts. His final words: the dinar will rise only if Iraq rises first. Expert 5. Private wealth manager with clients in the Middle East. My final interview was with a private wealth advisor who services ultra-high net worth individuals with holdings in the Gulf region. He's seen plenty of clients invest in currencies, including the IQD, as a hedge or speculation. We have clients who hold physical IQD notes in vaults, he said. Not because they expect a 1000x return, but because they see it as a symbolic investment in Iraq's future. They believe in the country's long-term recovery. He emphasized that the real value of such a position is in understanding geopolitical timing. Iraq's post-war rebuilding, its oil sector development, and its relationship with global institutions like the World Bank and IMF are all signals worth watching. He was also blunt about misinformation in the space. Too many people are being misled by gurus promising fantasy rates, he said. There's no official confirmation from any central bank or financial institution about a scheduled revaluation to $3 or $4. That's not how monetary policy works. Instead, he encourages clients to treat IQD exposure as a very small, speculative slice of a much broader portfolio. If it pays off, great. But if not, it shouldn't derail your financial plan. So, what's the verdict? After hearing 5 distinctly qualified voices, each with real-world experience and boots-on-the-ground knowledge, a few clear themes emerged. 1. The IQD is not a scam, but it's not a shortcut either. Every expert acknowledged that Iraq holds potential. It's rich in natural resources, particularly oil, and has an educated population ready for progress. But the currency's value will not rise by decree. It must be earned through policy, reform, and economic growth. 2. Revaluation doesn't work the way many think. No major currency has ever revalued overnight by thousands of %. Even redenominations, like lopping off zeros, don't inherently increase value. Real appreciation is gradual and grounded in real-world fundamentals. 3. Geopolitical and economic alignment is key. All experts agreed that Iraq's return to stability, regional influence, and open market status is what will ultimately lift the IQD's value. None dismissed the possibility of a brighter future, but they all cautioned against timelines based on rumors instead of facts. 4. Misinformation is rampant. False narratives, unrealistic rate predictions, and unscrupulous dealers have created a jungle of confusion. Investors must be extremely careful, verify sources, and understand how currency markets actually operate before making decisions. 5. Long-term hope, not short-term hype. The consensus: the IQD may one day gain value if Iraq stays on the right trajectory. But expecting instant wealth from it today is misguided. Final thoughts. What should you do with this information? If you hold IQD, or are considering it, do so with the right mindset. Understand what it is: a speculative, illiquid currency from a rebuilding nation. That doesn't mean it's worthless. It simply means the road to value is longer, harder, and more complex than many online voices claim. Diversify your portfolio. Monitor geopolitical events. Pay attention to credible news from the Central Bank of Iraq, the IMF, and respected financial institutions, not YouTubers or Telegram groups claiming inside knowledge. Above all, invest from a position of knowledge, not desperation. Real wealth is built with strategy, not superstition. So, after talking to 5 of the most seasoned experts in currency markets, what's the honest truth? The IQD holds potential, but only if Iraq fulfills its own. Until then, treat it like what it is, a high-risk, high-speculation position. Hopeful, but grounded, bold, but cautious, and ultimately, a bet on the future of a nation still finding its way. Like and subscribe for more videos.